Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. So, have you guys gotten your fill of volatility yet? Uh, because don't worry, it's gonna be a quiet couple days, right? Not like there's like a huge international summit coming up. Clearly, I'm joking because this weekend, we've already had some pretty big swings this week. Well, in the last 2 weeks, really. I mean, basically everything we dropped throughout Thanksgiving week, we've now made up. Yesterday, 600-point day. It's actually our 2nd of November. This was a day following the midterms. So, uh, two 600-point rallies within November. Uh, but what I wanted to talk about today was expectations heading into this weekend. So not necessarily what's going to get done because who the heck knows what's going to get done, right? Trump's meeting with Xi Jinping. I mean, there's been so much chatter and so many headlines purporting to possible negotiation or deal or what have you. I mean, there's really no idea, or I don't know if anybody has any idea of what exactly is going to be accomplished this weekend. But what I can tell you is what the market is anticipating, what type of move, and for us traders, that's probably a lot more important, right? So just like a quick state of affairs, right? What we have is big rebound could possibly be setting up a double bottom, right? I mean, spiders didn't quite get down to retest the October low, but they got in the vicinity, snapped back, still trading underneath the key 200 day. So that's still near term negative until it can reclaim that. What's interesting is the VIX, right? So the VIX, even with yesterday's big move, the VIX is still hanging around 20. So it's still got like a bit to it. And this weekend is probably going to play a pretty significant role into how the VIX goes from here. And also, I mean, obviously with the SPY, the Qs, basically all the averages, we're set up into like a kind of like a seasonally strong time of the year. But whether or not that plays out is probably going to depend on how this weekend goes to a lesser extent, maybe. So with that in mind, what I want to talk about, right, is SPY. So people may be saying, okay, like maybe this weekend's gonna be a non-event. Nothing's gonna get accomplished. Well, that's not really what the options market is anticipating, right? So just looking at, so this is the options that expire tomorrow. So going into tomorrow, you can see right here, say like 274.50 weekly spider straddle, pricing in about, say, about $2. So that's maybe with like early expectations of an early deal getting announced or something positive getting announced. Because 2 points is would be high without some sort of catalyst for SPY going into a Friday. If there's a jobs number Friday, it's a different story. But there probably is some expectations that some sort of deal or some sort of catalyst comes out tomorrow, maybe ahead of the weekend, right? But what I really wanted to highlight was the Monday. So here you can say 274 straddle, right? Just a little under $5 for Monday. So this is December 3rd. That's Monday expiration. $5. That's what we weren't even pricing that much for the midterm election move. I think that was about 4.5. So you can see that there's a very high premium for options just going through the weekend. I mean, like these are Monday expirations, so that's really nothing. It's basically a bet on the G20 this weekend. And what's interesting, right, is that normally there would be like a pretty significant skew. So skew meaning the implied volatility of the puts be trading at a premium to the calls, but it's not as sharp as you would expect, right? Especially considering like the SPY is up 11 points in the last 3 days. I was trying to think, 11, 12 points. The skew, it's not that sharp, and this is just kind of like a normal skew for spiders too. I mean, typically spiders will trade at like a premium, but it's not as wide as you would have expected going into like an event where there could be a pretty wild swing. So what that means to me is that it's kind of like almost like even money coming in, where you're seeing some upside bets and some downside bets versus just straight put hedging. So actually, kind of elevated expectations this weekend, and it seems like there's decent money coming in on both sides. I mean, there is some hedging, obviously, but there's also been some bigger near term, really short term bets that are like coming in. And just to compare it, so you can see, right? So say about $5 for the Monday expiration, you're only paying like an extra dollar for 2 days on top of that, right? So this is the December 5th, so that's Wednesday expiration, right? That's trading at about $6. So really, you can see that almost 80% of Wednesday's expiration is tied into the outcome of the weekend, because I mean it's $5 for the Monday straddle and then $6 for the Wednesday straddle. So it's really only priced it in about 2 points for Tuesday and Wednesday, right? So it just shows you that yes, there's been a lot of chatter, and a lot of people, at least from what I've read, a lot of people aren't really anticipating a major deal, but the option market is anticipating a pretty large swing. So you kind of have to wait and see like who wins out here. But definitely expect some fireworks come Monday, because the option market is telling you that there's going to be a big move. All right, guys. As always, love to hear from you. Reach out, questions, comments. Pass them along. Uh, I'd love to do these videos on topics that you guys want to hear. So the more you pass along, the more I can tailor the videos to the topics that you really are interested in. So have a fantastic night. Uh, Best of luck trading tomorrow, and gear up for potentially wild Monday. I'll talk to you guys, all right?